Good afternoon, everyone. This is Anka Metcalf with Trade Out Loud, and welcome to today's video. We will talk about the market outlook, the futures market outlook, and it has been some time since we have discussed and on my YouTube channel about the futures market and having an outlook set for the current trading week. So we're going to be starting this today. All right, so let's take a look at the futures indices, and we're also going to look at gold and oil. But let's begin with the Dow first. The Dow has not made a new high last week, but it has finished the week super strong. And we have been consolidating. We have revisited the 20 SMA, and actually we're revisiting the core of this range. This is a very bullish range that we have on the daily chart. We've noticed that the price is trading above the moving averages. And as you could see here, we had a high on the 6th last week of 34,755. We actually closed above that. We hit a high this week of 34,784. And as you can see, we're still trading into resistance. But there's one thing that leads me to believe that this week we have the possibilities for a breakout, and that is every single time we have a consolidation that is happening into highs and into close to all-time highs at 35,000 here. We are digesting, we're chewing up this resistance for future move even higher. Now, let's take a quick look on the weekly chart. On the weekly chart, we had a 2-bar pullback into the 20 SMA. And as you could see here on these technical charts, there is chart symmetry. So the Dow loves to pull back into the 20 SMA before launching higher. It has happened last year in October, end of October. It has happened also this year in February. And this time around, it happened in June. So we had a turnaround in June, rotation, took the price higher. And as you can see right now, we had 2 consecutive weeks where buyers actually lined up at the 34,050 area and pushed the price higher. We actually have a brand new high this week compared to the prior week. We're still trading into the prior resistance high, but this is a very nice bull flag formation coming from this really nice move that we had to the downside. Now, I really want to show you something that a lot of you guys may be asking. I have received tons and tons of email. Where do I see the Dow higher for the next quarter if we are going to have a move to the upside, and why the pullback into the 20 SMA and not steeper or even not a little bit more shallow than we have already had, and because we were trading off the 10 EMA. So the pre-pandemic high and the pandemic low that we had last year in March led to this rally. So if you're looking at the extensions, the pullback that we've had in June, end of June, actually 2 weeks into the end of June, and this also coincided with, we had the contract roll, we had quadruple witching option expiration, and right after that, we started to launch back into the highs. Now, as you know, every single time when we're trading into the roll month, into the quadruple witching expiration, the price action is always tending to react a little bit more chaotic. So it's trying to find its true balance once everything is all said and done. We also had the end of the quarter with window dressing, which led the price higher. So do we have room for higher? Yes, we do. The next measured move is into the 36,623. So this would be the next move for the upside, the next leg higher once we break above these highs. And into the end of the year, if we are going to remain bullish, and going into next year as well. So just remember that this is going to be into a much wider time horizon. So it could be a couple of years. It could be depending on the market environment, depending on so many geopolitical factors and everything. One thing that I'm very excited about is that this week we start earnings season. On Tuesday, on July 13th, we have the first companies that will be reporting earnings, and we have JP Morgan, Citi, so financials, Wells Fargo, that are going to be the three major financials that will start the earnings season. Financials are a very important component for the market, especially for the Dow and also for the mini S&P. The Dow primarily because the Dow has JP Morgan and Citi into its index. So therefore, we can observe and we can expect some kind of price action into the Dow rather than into Nasdaq throughout this week, and into the mini S&P as well. Mini S&P, which is oil rich and financial rich. So these are the two extended targets that we're seeing. Also, what I want to look at, and I always look at the monthly structure. The monthly structure has a really nice bottoming tail candle, and as the name implies, it means that there's a lot of buying that has occurred from this double bottom formation and into the support level. And we're also waiting for this rotation for higher here. We do have a high of 827. That is for the month of June. And we have the high of 784. So we still have a little bit of room into this high. Once we take out this high, 35,000 is going to be a no-brainer. It's going to continue higher, and most likely it will start popping into the nice tradable void all the way into the 35,000, and of course into the 36,623. Very nice projection for the Dow. All right, so let's take a quick look at the mini S&P. I know many of you guys trade the mini S&P. mini S&P has formed a brand new high, an all-time high on Friday. Very strong, very powerful. Has launched once again off of the 10 exponential moving average. We saw a little bit of gyration into these tails. These tails were, I think, nothing else than running some stops. We definitely had a short trading week last week, only 4 trading days here in the US, and we did have some price gyrations. It actually was a roller coaster type of week. We had the punch down, move back up, so smaller time frames, and day trading was a little bit more difficult because they were running the stops. So we're seeing the price trading in both of these days. On Thursday and Friday, we again found buyers. Once we hit the 10 EMA, boom, we went higher. We actually closed into a brand new all-time high. We had a high of 43.64, and we have a nice support level here. So we're re-engaging off of this 10 exponential moving average. Really nice fanning out of the moving averages. If we would have closed below, and even this week, this upcoming week, if we see any violation of 4,300, we have a really strong possibility of revisiting the minor support level into the 42.50 to 42.60 area. We have a cushion of support into that spot. From this point, we can become bullish again based on any technical rotation that we see on minor time frames. So this is going to be a watch as well. So again, once again, we're going to be a little bit more bearish biased if we violate the 4,300 all the way for about, I would say, for about 40 to 50 points, all the way to 60 or 50, at which point we become bullish again. And on any close below 42.50, we are going to be bearish again all the way to the core of this range into the 4,200. We're going to have to wait and see how that happens. Don't forget that financials are a big component within the S&P 500. And therefore, based on the results that we're going to have out this week from a lot of financials, and also continuing into next week, because financials are going to be front and center for the next 2 weeks, we are going to see probably continuation or price rejection into the mini S&P. This is the most exciting time for trading because fundamentals are going to dictate rather than economic releases. And speaking of economic releases, this week we have so many releases out. So it's going to be such a rich week in economic releases. Not only that, we have on Tuesday, we have the CPI and the core CPI. We also have the federal budget balance. We also have the PPI on Wednesday. And guess what? We have Federal Chair Powell that will be testifying 2 days on Wednesday at 12 o'clock. And of course, on Thursday, and he will start testifying at 9:30 in the morning. So, that means it means a lot of more price gyration for the New York trading session traders, especially for me, because I'm only trading the first 2 hours in the morning. Day trading 2 hours in the morning. And again, we have some retail sales to end the week, and preliminary University of Michigan consumer sentiment. And don't forget that on Friday, we have option expiration. So what this means is that we're going to have a lot more price gyration into the market more than usual. All right, so let's take a look at the weekly chart and see the projection. So we had a range, actually a really nice bullish range into the 42.50. Once we snapped and the price traded above the 42.50, we extended higher. You could see that we have extended 1, 2, 3 from the 10 exponential moving average. And if you recall, I was showing you the range into the E-mini Dow, into the Dow futures, and you could see here that we're pretty much expecting this kind of price action activity into the Dow. So the Dow's a little bit weaker. Like I said, we did have some pullback in financials, and we did have a little bit of price turbulence within some value stocks. The value stocks are rotating back now, so we're gonna have to wait and see this week how they perform. But anyways, with a close like this on Friday and with a close like this for the week, we can expect the price to continue higher. And what I do like is that the monthly chart already initiated higher by a bunch, by a lot. So we have last month's high into the 42.94.25. We're already closed. We didn't close. We have a lot, two and a half more weeks, I think. And we are going to probably continue higher in this pattern. So for those of you, and again, I receive these emails every single week. Where is the price going? Does it have room for a continuation higher? For those of you that are looking long-term SPX, for those of you that are looking long-term futures, long-term SPYs, I am going to take my, I'm going to show you in just 1 second as soon as I am getting it here. All right, here we go. All right, so I'm going to show you pre-pandemic high to the pandemic low and the projections. Notice the price zigzag into this 161.8% level. This is a fib extension. Notice the big rally that we've had. This 10 exponential moving average is the S&P 500 futures best friend because it's trading above it. And you can see that very shallow pullbacks, and the pullbacks are a little bit more dramatic because they happen all in 1 day or in 2 days and then done. It's a little bit of drama, and then the trend resumes back to the upside. We have 1, 2, 3 up. Now, there's one thing that you need to know every single time, and this coming from the fib numbers, we have 3 bars up, 5 bars up, 8 bars up. These are fib numbers. So you can expect a pullback. 1, 2, 3 bars to the upside, 1, 2, 3 green. You can expect a little bit of a pullback. You see 1, 2, 3, 4, 5 green. You can expect a little bit of a pullback. And then into the 8 bars, I'm going to show you the 8 bar. Again, it's going to be very interesting in our next index. Then you can expect a little bit of a pullback. We're not that far extended into the E-mini S&P. We're not far extended, and we have a really nice fanning out of the moving averages, and the next projection for it is 53.77. So it has entered into a really nice tradable void. But remember, with the price never goes parabolic exactly into target, and it's still going to create some pullbacks, and these pullbacks are likely to happen within earnings season. Now, there's one thing that I love about earnings season, and especially about the first 6 weeks in earnings season, is that they are super powerful. They are going to move the market a lot. So if you want to make your money this summer, make these 6 weeks count. The first 6 weeks are the most dynamic. All right, so last but not least, let's take a look at the monthly chart, and you can see here a really nice extension to the upside. But notice that the monthly chart is way extended from the 4,000, which is where the 10 EMA is. And at this point, like I said, we've had a really nice continuation higher. We have a bull sandwich that happened back in February with a continuation higher. So we are 1, 2, 3, 4, 5. This is the 6th bar. And again, we still have some time. Like I said, I think we have about 3 weeks left into the month of July. All right, so projections for higher, they do look higher. So at this point, we're not going to be bearish biased due to the fact that we closed very strong on Friday and we are still trading very, very strongly on the weekly. All right, so let's continue with NASDAQ. A lot of you guys ask me questions about NASDAQ and how's NASDAQ. NASDAQ has been a little bit shakier from the and a little bit more whippier. It had the stops were a little bit wider from the day trading perspective, also from the swing trading perspective. But what else is new? I mean, we've had these really wide ranges and these really wide stops since 2018. 2018 was the year like it flipped the switch, and these we have had steeper pullbacks. The market was a lot more choppier, a lot of topping tails, a lot of bottoming tails, lots of running of stops, lots of algorithms that were introduced back into the market in 2018. All right, so what do we have in store for NASDAQ? NASDAQ on Friday managed to take out the high from Thursday. Thursday was a sell-off, a sell-off day, found buyers into the 10 exponential moving average, rotated for higher. In fact, it had a really nice buy off the 10 EMA. Very aggressive, however, not for the faint of heart and for the individual that wants to be super conservative in trading. We have a really nice sandwich setting up here. So just because we triggered and because we closed strong and into the highs here, you can see 14,814. We have an all-time high. So we actually started to pull back after hitting an all-time high. So yeah, I know I'm making that face like, what? Okay, yeah. So yeah, we did make an all-time high, 14,883.75, and then we rotated back up. So once again, this week, if we start trading above this high, this candle high, which is 14,832, we are going to extend higher, and most likely we're going to be going for a target into this all-time high of 14,883.75. And we are looking higher as well on the weekly, but remember I told you that we're going to be looking at an 8-bar extension on the weekly. Now remember that that wasn't the case with the Dow, that wasn't the case with S&P, but it is the case for NASDAQ. Inside bar, really nice pinning candle, doji. We have 1, 2, 3, 4, 5, 6, 7, 8, and we're extended from minor support spot, which is into the 14,050 area. So at this point, we're going to be monitoring this price action, this activity super, super closely. Because if we start trading under this candle low, so this is last week's low, 14,540.5, we are going to expect a pullback, and this pullback that I'm looking at. So we're going to be bearish from 500 all the way to 200. So not that much, but we're going to be bullish again back into the 14,150, contingent on smaller price action rotating off of these levels. Okay. All right, so let's continue with the monthly chart. Brand new high. We have a nice extension for higher. Look how choppy it was though since September. Drama pullback, remember? So we had 1, 2, 3, 4, 5. Remember what I said, 3, 5, and 8. If this is the only takeaway from today, if you can count to 3, 5, or 8, that's when you can expect the pullback. So we're having the pullback close to the 10 EMA, rotation back higher, a little bit of a choppy price action activity that we had here, for the first month of the year. March actually consolidated, punched higher, and again with the really nice extension. Now remember that back in May, NASDAQ was the only index that had not made a new high. All right, so it recuperated a little bit right now. So very interesting patterns with all of these indices. But last but not least, I have one more for you, and that is Russell. Russell has been consolidating for a very long period of time. In fact, since all right, so this is since February 9th. February 9th, it hit a high, and then we had an all-time high already hit in at 23.66, right after the contract roll back in March. So what this is going to do for price, so this can be treated as a very bullish range. You could see that every single time it got back into the 2100 and it popped up. So we had 2100 pop up, we had 2100 pop up, we had 2100, close to 2100 pop up, 2100 pop up, and then now we have a double bottom a little bit higher into the 2200. So we have advanced a little bit from 100 to 200 right here. So we are getting the range into a little bit tighter spot because we're not trading into a really wider range into the 2100, even though this is a really good hefty support spot. This is going to be a really big buy zone right here into the bottom of the range, but you can see that price is not coming in. Now, this is not the best of closes because we closed borderline into the high, into the 10 exponential moving average, and we didn't take out the 20 SMA. Needless to say, we didn't take out the 10 EMA, so we're still trading in the core of the range. So for the price to explode, we need to see it above this range. So we need to see it at least 2330 to 2340. 2330 is going to be actually that breakout, let's say modest area that we can expect a continuation back into the 40 for about 10 points. And then once we get the price, and if the price is going to start grinding 40, 45, 50, 60, then we could see the big expansion to the upside. All right, the weekly chart, you can see here tons of buyers. All of these bottoming tails were reaction off of the heavy support that was developed into the 2100. It's as if they programmed 2100 into their algorithms and they were buying it continuously into the 2100. So they're not letting Russell die. So very, very strong on the weekly. Also on the monthly chart, you can see here that pretty much we are still trading within the parameters of June. Once again, we take out the June high, and June high is actually into the 50. We take this candle out, we take the 50 out, we're going higher. I don't think that we're going to have any kind of issue with the 2366. And also, if you guys want to see the projections, what I'm looking at, so I'm looking at a possible continuation higher. All right, fasten your seatbelts. We're looking for targets into the 2440, and we're looking for targets for 2500 and 2550. These are the next two bigger targets that we're looking at. And I already have a position in RTY long, and we're looking for a bigger projection into the 2800. All right, so keep this video handy going into the end of the year to see how the price behaved. All right, so let's take a look now at two commodities, and I'm just going to go over gold. Gold is very interesting. I saw a lot of comments regarding gold. Is not, one of the favorite things to trade at the moment, and it has been very, very choppy. It has not lined up, and definitely gold is one for the bigger time frames. It's more, in my personal perspective, it's more of a wealth generation type of trade. So if you have some money set aside to invest in gold futures or GLD or physical gold, it is a really good idea. Okay, so that's just my my perspective. So let's start with the daily chart into gold. I'm gonna look here. So we had a double bottom. From this double bottom back in March, we rotated and we continue higher. We are trading back into resistance. What the pattern is doing right now, it pulled back into minor support area. Look at the prior resistance that just became support at the 1750 psychological price level as well. We had sort of a double bottom with a wiggle down, shaking out all the stops and rotating back to the upside. We have regained the 10 EMA. This is big for price, at least for the daily, but the price is still squished between the 10 EMA and we have this death cross right here. It's right on the daily. This is usually super bearish, but we're going to have to wait and see because the new conjunction that we have is we have support into the 1790. We have resistance right now into 1820. So going into Monday, if we take out 1820, we have room to project higher. Any kind of close above this death cross right here will propel the price higher, because as you can see, this is the first step. So if you're thinking about initiating a swing, this is the kind of pattern that you want to see. This is a little bit more on the sloppier side, but you definitely want to put in a temporary bottom Double bottom is a lot more solid than a V formation bottom. And definitely you want to see a higher low. This is typically when I like to scale in a quarter or a half. Not all the position at once. And then because you don't have the proof, remember, when you're looking at trend changes, you need to see 2 and 2. So you need to see two higher highs and 2 higher lows. So this would be like the first higher high. So would be the leg in opportunity for you. And also the weekly chart, like I said, super choppy. We haven't had a new high since last August. Beginning of August has been like almost a year since this really beautiful mega rally. We took advantage of this last year and we have started to pull back. You see the fight here off the 10 EMA. We came one step lower. You see the fight off the 20 SMA. We finally closed lower and we could see that the price tried to break above off the 50 SMA. It hasn't made a new high, so we didn't have any kind of proof, a rotational pattern, so there's no reason to go long into this area. And then again, we started to revisit the 1670. We had a nice range formation into last year that it's actually the area where we broke out. And we could see here that we have a really nice double bottom formation if you look at this weekly chart. Projection for higher, you can see that we topped into this high. We did make a new high. However, this is very constructive because we talked about it on the daily structure. On the daily, we have the low, we have the double bottom. This is the double bottom right here. It's a little bit compacted because it's a weekly. And we have the higher low, still under pressure because the weekly closed below the 10 EMA, borderline. So what that means is that this week, if we trade above 1820, we will start expanding higher, at least into 1850. That would be the target. And then again, on high pressure, any close above into the 60s will, if this week, let's say we close into the 60s, we can definitely start heading higher into the 1900s. And then we can see how we are going to deal with this high. From the monthly structure, well, I kind of like this formation right here because guess what? July, we're just at the beginning of July. So we've only had one full, well, not even one full trading week. Last week we had 4 trading days, but we had 2 other trading days prior week. So let's say we have 1 week into the month of July. So what this means is that if the price is going to hit into the 1900, this is going to be a massive bull sandwich. Any kind of price action activity that is going to trade above these highs will continue higher. And this is nothing else but a massive bull flag formation on the monthly chart. One more surprise for you guys. This is the quarterly chart. Every single candle that you guys see here represents 3 months of trading activity. When you're looking at higher time frame charts, you need to evaluate them. For example, gold is a really great commodity to trade on higher time frames, to invest in wealth generation. Because if you're looking, for example, on this quarterly chart right here, and I would draw a line, you will see that the trajectory is higher. Even with the swings and the pullbacks, it has a tremendous growth. So since 2000, you could see, so for 20 years, the price has been riding higher. Back in 2020, back into the year 2000, the price was at $290. The price now is at $1808. This is where we closed. So very strong structure. What do you think happened here? The price made a new high and the price came back. Is what price is doing. The price needs to find balance and it needs to find another support level from which it can pivot and rotate for higher. Why? Because it needs that foundation. It needs that big foundation from which it can extend higher with another leg higher, obviously. Because any kind of shallow pullback is not sustainable for price action. So the price needs to stabilize into a prior high. It needs to digest the prior high before continuing higher. This is a beautiful formation here. And for those of you that are trading silver, I'm going to put silver here. So you're going to see that I still have a lot of levels in here. We have minor support from 2014. We also have here support for price. You can see here, this is the new quarter that has already started, and we're still grinding into this level. We're definitely very bullish above. We're still looking price projection higher. We're looking for targets into $35 and $50, at least $50 at least. We had a brand new high here of $50. Guess when? Look at the price. Look at the time, guys. Into the 1980s. All right. So last but not least, oil. Oil has been extremely choppy as well. Let's take it one by one. All right. So it has been incredibly bullish. It has been running like wildfire higher. It has been very choppy through the springtime. And then it's finally gaining a lot of solid action within the last few, within the last couple of months. So what do we have on Friday? On Friday, we closed into the high. We closed at 74.76. This is a very strong close off of this rotation. Typically, any kind of close into these highs, we can expect continuation higher into the 76 and into the 77. Taking into consideration, we have 76.98. This is an all-time, this is the new high. Sorry, it's not an all-time high. All right, this is a new high for this year. And we have a rotational pattern, which is conducive for a continuation higher. This is also a bull flag formation, if you will. This is a pullback into the 20 SMA. The last time we pulled back into the 20 SMA was back in May. So we still have that really nice sustained move in this area. Now, weekly chart. Really nice visit into the minor support level area. We have a double top formation here. We revisited this area. The 10 EMA again, boom, caught the price, punched it higher. It found buyers into the $70, projected the price higher, and we ended the week in a doji. So into this upcoming week, caution. If we trade above last week's high, you can see it right here, we're going to continue higher. And I'm going to show you where to in a second. But if we start closing this week, we're going to start closing below $70, we're going to start retracing. Most likely, we're going to revisit minor support into the 65. You have heard me mention minor support. This is my favorite support of all times. Why? Because minor support area can only be determined in uptrends. That's right. And it's so much more powerful than major support, even though major has that major connotation. No, minor support, a lot more stronger. And I love trading off minor support areas. All right, so let's take a look, expand a little bit higher into the monthly chart. You can see that we have the reason why we have ended the week in a doji here. We have resistance into the 77. We have tapped into that resistance. And right now, this doji that is trading above this 200 simple moving average, this is the line in the sand. It's bullish above, bearish below. So this is going to make it or break it. And again, the proof is going to be this week if we take out this high. We take out this high, we're going to start moving higher, way, way higher. Most likely, we're going to move into the 80, 84, 85, and even back into the $90, 100 to 100. And 110. This is the long-term projection on it. And the reason why I'm telling you this is because many of you may not trade futures oil, but may trade USO. So USO kind of like the same picture, and it is projecting for higher. Now, I have one surprise for you guys, for those of you that have listened in to the end of this market outlook. You should know that TopStep and TradingView. So as you know, TopStep is a funding company. We have partnered with them for the last few years. And for all of you guys that are TradingView users, it is official. So now you can become funded through TopStep. So how amazing is this? So if you're not familiar with TradingView, you suggest you check them out. Go on tradingview.com. They're really robust and really, really robust trading platform. Is really rich in charting, and they have really competitive prices. They offer hundreds of pre-built studies and tools that you can use on your charts. As you can see from my charts, I don't use a lot of tools, but they have a really good platform. They have a really good charting software. So if you guys want to check them out, don't forget you can actually start becoming funded. You could actually become funded with Top Step. And guess what? If you click the link below into this YouTube video, you will have an extra 20% off when you sign up for Top Step. So that's very exciting. So Top Step has partnered with TradingView to bring you great charting, great software, and great trading and funding. Because let's face it, one of the biggest problems traders face when they begin trading, they save up a little bit of money, they start trading, they blow up their account, and they need to wait months or probably years until they save some money to get back into the trading and back into trading again. And with Top Step, you prove you can trade, you become funded. We have many traders into our trading room and our program, our education, that are using Top Step successfully, and they're making money. They're pulling paychecks out of Top Step. So that's very exciting. All right, guys, this is it for now. Don't forget to hit the like button if you like this video. If you like this video and if you hit the like button, you're going to see another one next week. And don't forget to subscribe to our channel, and also don't forget to hit the bell. All right, so you get an instant notification once a new video is popping up on our channel. Thanks so much, everyone. Hope you all have a great, fantastic week.